All right, I need to update my stock price prediction for Supermicro computer stock in 2 years in 2026. That's because the stock price prediction I gave a little while ago is now obsolete. Supermicro computer stock has soared in recent weeks, and it's already hit the price target I gave for Supermicro computer stock in 2 years, and so I need to update that recommendation. Also, Wall Street analysts upgraded their earnings per share forecast for Supermicro computer stock, so I'm going to incorporate those new forecasts into my new valuation estimate. So let's jump in. Let's take a look at the updated estimate.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so a little while ago, I did this video where I predicted where Supermicro computer stock would be in 2 years. And in this video, I predicted that the stock price would be between $775 per share and $825 per share. And of course, if you've been following Supermicro computer stock, you'll know that it's already in that range. In fact, let's take a closer look at what the stock price is now. So as of this recording, Supermicro computer stock price is $795 per share. It's already in that range of $775 and $825 I gave a little while ago. So I'm going to need to upgrade this recommendation. Also, I'm going to need to upgrade the recommendation because two major factors have changed in addition to the stock price, and those are Wall Street analyst estimates for where its earnings per share could be and its price to earnings multiple. Investors are now willing to pay a higher premium for Supermicro computer stock given its substantial growth in revenue and earnings in the latest quarter, and so analysts are upgrading their forecast for Supermicro computer stock. So let's take a look at those forecasts. So here I have for fiscal year 2025, which ends in June 2026. That's why I call it my 2026 or 2 years prediction. Analysts expect Supermicro computer stock to deliver $30.98 in earnings per share. This is up from the last time I made this recording updating Supermicro computer stock. So Wall Street has become even more optimistic, if you can believe it, on Supermicro computer stock. Remember, this is a collection of Wall Street analysts that are following Supermicro computer stock, and they submit their forecast for where they think earnings per share will be in these years mentioned here. And so this is the consensus estimate from those Wall Street analysts. And you might be surprised to see that this estimate is going up, even though it's been up already. And so that's what I've been saying with these AI stocks that I've been following. The market for AI, even though it's been extremely hyped up, it's been extremely popular, it's been extremely momentous, is turning out to be even better than expected, if you can believe it. Even better than all the hype that was expected in 2023. That's because as companies are reporting sales, earnings, all these numbers, orders are way better than what people were expecting. And so that's causing Wall Street analysts to revise their targets upwards. So the next estimate I'm going to need in addition to the earnings per share is the valuation. So right now the stock is trading at a price to earnings ratio of 62. 62. That's nearly 3 times the level this stock has traded for in the last 5 years. It used to trade at a price to earnings ratio of around 20. Sometimes it was below that, sometimes it was above, but roughly 20 was the average price to earnings multiple for Supermicro computer stock. Now it's at 62. You're going to see in my estimate, I'm going to suggest that this comes down, that it's unlikely to stay at this high of a premium in terms of valuation. So now let's look at the actual model where I predict the stock price. So you'll notice the difference here. When I did the video prior, it had an earnings per share estimate of $26.24 for 2026. That's been upgraded to $30.98. So a $4 increase in earnings per share estimates for Supermicro computer stock. And so you can start to understand why the stock price is up so much is because the earnings per share are expected to increase by so much, and it's justified by increases in profitability, by increases in revenue. And I can show you one more thing here. In their latest quarter, revenue increased by 103% year over year. 103%. And that caused the company to revise their forecast upward from, they thought previously that they're going to deliver 2.8 billion in revenue in fiscal year 2024. They upgraded that to 3.6 billion, so an 800 million increase in their revenue forecast for 2024. And this just goes further along to show that things are even better than expected. Things are coming in even better than expected, even though expectations have been so high to begin with. So if its earnings per share does come in at $30.98 as Wall Street expects in its fiscal year that ends in June 2026, and the price to earnings ratio stays the same at 62, then its stock price could reach $1,920 per share. Again, a significant increase from where it is today. Although I don't think this scenario is the most likely scenario. I think the price to earnings multiple will decrease. I think it will decrease as its rate of growth decreases. I still think it's going to grow, but I think the rate of growth is going to decrease. I don't think Supermicro Computer is going to grow revenue at 100% for the next 2 years. I think it'll grow revenue at these higher levels for a quarter or two or maybe 3, but then the rate of growth will slow down as the business levels up. So the price to earnings ratio will come down as the rate of growth comes down. Now, I don't know precisely where, but let's look at some scenarios. If the price to earnings falls to 50 with the same earnings per share, then the stock price could be $1,549. If the price to earnings falls to 40 and the EPS stays the same, then the price could increase to $1,239. If EPS stays the same, PE falls to 30, then the stock price could reach $929 per share in 2026. So let's take another look at where the stock price is now. So as of this recording, it's at $795 per share. So all of those scenarios I just looked at showed that the stock price should increase in 2026 if the company hits its earnings per share target. If the company hits the earnings per share that Wall Street expects it will hit in 2026. Although I do think the price to earnings will fall. I think the price to earnings will fall closer to 30. And so if I was to give my prediction for where I think Supermicro Computer stock will be, I would predict on the lower end of these scenarios. I would predict that the stock price could reach between $875 per share and $925 per share. And mainly because I expect the multiple to come down. Right now it's at 62. I expect it to come down to 30 because, as I showed you earlier, the stock had traded for a PE multiple of around 20 for the last 5 years. And so I do expect it to trade at a higher multiple than 20, but I don't expect it to increase by, double or triple. So I'm suggesting that the price to earnings multiple goes up from 20 to 30, and it trades at a PE around 30, and that's why the stock price I suggest could reach 875 and 925 from where it is today, which would be a moderate price increase from where it is today. It won't be an explosive price increase from where it is today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.